Robinhood just delivered a blowout quarter, and Wall Street noticed. With the stock up nearly 184% year-to-date and around 40% over the past month, Hood has suddenly gone from being a left-for-dead meme-era trading app to one of the hottest names in fintech and crypto. Its second quarter earnings report shocked to the upside, and the company's recent innovations in tokenized assets and crypto trading are creating serious buzz. But now that the euphoria has settled a bit, there's a more important question to ask. Can Robinhood actually sustain this momentum, or is this a short-lived rally fueled by hype and hope? Let's break this down. First, the quarter itself was undeniably strong. Robinhood reported earnings per share of 42 cents, smashing Wall Street estimates. Revenue came in at $989 million, up a whopping 45% year-over-year. Those are impressive numbers on the surface, but the details are where it gets really interesting. Transaction-based revenue, the company's bread and butter, hit $539 million. That's up 65% compared to the same quarter last year. Options trading, which has long been one of Robinhood's biggest profit drivers, brought in $256 million. Crypto trading revenue came in at $160 million, nearly double what it was a year ago. Now, let's be clear, crypto trading revenue did slightly miss some of the more aggressive analyst forecasts, but given the volatility in that space, a 98% year-over-year increase is nothing to scoff at. Other metrics were strong too. Average revenue per user climbed to $151. The platform now has 26.5 million funded accounts. And perhaps most impressively, total assets under custody surged to $279 billion, almost double where it was last year. These numbers tell a story. Robinhood isn't just surviving. It's growing, and growing fast. But now comes the hard part. After this kind of breakout quarter, investors need to consider whether Robinhood can keep delivering or if this was a one-off performance boosted by short-term catalysts. Let's start with what's working. Robinhood's innovation engine is in overdrive. The company launched tokenized US stocks and ETFs for European users, allowing commission-free, blockchain-based trading of over 200 American equities. These tokens were initially launched on Arbitrum, a Layer 2 Ethereum network, but Robinhood plans to migrate them to its own proprietary blockchain. That's a big step. The goal is to make 24/7 equity trading a reality, something that could reshape how retail investors engage with the market, especially outside the US, where time zone and access barriers have traditionally kept people out. They're also exploring tokenized exposure to private companies like OpenAI and SpaceX. While these aren't actual shares in those companies, they're structured in a way that gives users indirect exposure. This opens a door that's been closed to most retail investors forever: access to private markets. Then there's the crypto side of the business. Robinhood recently finalized its acquisition of Bitstamp, a well-established global crypto exchange. That move signals serious international expansion plans. The company has also introduced staking for Ethereum and Solana, along with perpetual futures trading for crypto in Europe. They're not just reacting to market trends, they're helping shape them. And this forward-thinking approach is part of what's fueling investor excitement. The bullish case is pretty straightforward. Robinhood is transforming from a basic trading app into a multifaceted financial platform. It offers equity trading, crypto trading, staking, synthetic access to private companies, and a developing blockchain of its own. Its product portfolio is diversifying, and its revenue streams are becoming more balanced. Add in favorable legislation, like the recent passage of the Clarity Act and Genius Act in the US House, and you have a company that's aligned with both regulatory momentum and market demand. It's no surprise that analysts are raising their price targets. Firms like Morgan Stanley, JMP Securities, and Piper Sandler now have targets ranging from $110 to $125, citing everything from growing user engagement to product innovation to global expansion. There's even speculation that Robinhood could be added to the S&P 500. While that didn't happen in the last reshuffle, the company now meets several of the key criteria: market cap, profitability, and sustained growth. If Hood gets added to the index, it would likely trigger significant passive inflows from ETFs and funds, adding even more fuel to the rally. But despite all of this, there are reasons to stay grounded. Let's talk about risks, because they haven't disappeared. The most pressing issue is regulatory scrutiny, especially around tokenized assets. European regulators, particularly in Lithuania, are already investigating Robinhood's tokenized private company offerings. There's concern that these products might mislead investors or skirt legal requirements, particularly when the companies in question, like OpenAI and SpaceX, have not endorsed them. In the US, while Congress is starting to warm up to digital finance, the SEC still hasn't issued firm guidance on tokenized securities. If the agency decides these offerings fall under its jurisdiction, Robinhood could face legal challenges, or worse, be forced to shut down part of its operations. Then there's execution risk. Building a proprietary blockchain that supports global, around-the-clock equity trading is a major technical challenge. Any hiccups in performance, security, or user experience could slow adoption or damage credibility, especially if mainstream investors start using these tools. And finally, we have the issue of user education and adoption. Tokenization is still a complex concept for most retail traders. Robinhood will need to do more than just launch these features. They'll need to educate users, build trust, and make the experience seamless. If people don't understand what they're buying, or if the process feels confusing, it could limit engagement and reduce revenue potential. So, can Robinhood keep the momentum going? There's a good case to be made that it can. The fundamentals are improving. The product roadmap is ambitious but increasingly credible. The company is executing better than it has in years, and it's riding multiple tailwinds, from crypto recovery to fintech innovation to potential index inclusion. But Robinhood is also walking a tightrope. Regulatory risk is real. The crypto space remains volatile. And overpromising on features like tokenized private company access or blockchain rollout could backfire if the execution doesn't live up to the pitch. In short, Robinhood's current momentum is justified, but the next few quarters will be the real test. If the company can continue to deliver strong earnings, scale its new products, and navigate the legal landscape, it could very well earn its spot as one of the leading fintech platforms of this decade. But if it stumbles, especially on the regulatory or technical front, it may find itself back in familiar territory, fighting to regain trust and relevance. For now, investors have reason to stay optimistic. The Q2 report wasn't just a one-time beat. It was a signal that Robinhood is growing up, and possibly growing into something much bigger than anyone expected. Thanks for watching. If you found this breakdown helpful, make sure to like the video, subscribe for more updates, and let me know in the comments. Do you think Robinhood's rally has just begun, or is it getting ahead of itself?